Interest rates and gold prices rise versus weak dollar after final U.S. debate. China set to stockpile copper to 2025. Gold prices held flat or showed a loss for the week against all major currencies except the dollar on Friday, trading in the middle of this month's tight range as global stock markets rallied, but copper trimmed its surge to 2.5-year highs as the U.S. currency fell following the final debate between White House contenders Trump and Biden. Copper prices retreated 0.9% from yesterday's peak after rallying by nearly one-half from March's COVID crash, driven by relentless demand from China and expectations for green energy and technology investment worldwide as governments try to reflate the economy from this year's slump. U.S. stimulus talks dragged on, meantime, reports Bloomberg, with no deal between Republican and Democrat politicians now likely until after the 3rd of November elections. Last night's presidential debate found challenger Joe Biden, widely expected to borrow and spend more even than Donald Trump if he wins, caught in lie after lie after lie, according to Fox News, but most of the rest of the TV news is presenting a starkly different view, says the LA Times. Losing 1.0% from last weekend by Wednesday night on the MSCI World Index, global stock markets today saw another rise in Asia while the Euro Stoxx 600 index erased almost all of this week's earlier 2.8% drop. Government bond prices meantime slipped again, pushing up the annual yield offered to new buyers of 10-year U.S. Treasury debt to the highest since early June at 0.86%. Cost of living expectations also rose this week but less quickly than interest rates. Together that pushed the real yield on 10-year U.S. government bonds up to -0.89%, the least negative in 3 months. When real U.S. rates last traded at this level, a multi-decade low when reached on 23 July, gold prices were $60 lower than today at $1,852. The low interest rate environment, and rising inflationary expectations, remain highly favorable for gold in the medium to long term, says Cameron Alexander, Director of Precious Metals Research at consultancy Refinitiv. Also pointing to economic headwinds, ongoing tensions between the United States and China, and the second wave of COVID-19, in the near term we are likely to see increased volatility, and choppy trading in the stock markets and the gold price, he adds, particularly in the run-up to U.S. presidential elections. We may well see the yellow metal hit a fresh record before the year end, says Alexander, reporting new demand data worse even than other estimates of a 25% plunge in global gold buying in 2020 thanks to COVID shutdowns, the global recession, and this year's record high prices. But copper is the darling of the market, said Bank of Montreal's Commodities Research Director Colin Hamilton at the LME Week seminar on Tuesday, pointing to targeted Chinese stimulus, unprecedented U.S. stimulus, increased demand from the renewable sector and issues on the supply side. Next week's meeting of the Politburo in Beijing is expected to confirm that stockpiling vital commodities such as copper is a key aim in its new 5-year plan, reports Reuters. Reasons include deteriorating relations with the United States, and the risk to future supplies shown by this year's COVID-19 disruption to mining and shipping, says analyst Max Layton at U.S. financial giant Citi. BMO also expects aggressive renewable infrastructure policy in China's 14th 5-year plan, adding extra demand for copper wiring. Also counting solar energy as well as 5G telecoms technology among its industrial uses, silver rose Friday to show a 2.9% weekly gain versus the weaker US dollar at $24.85 per ounce, more than doubling from March's COVID crash low. Gold prices meantime traded 0.7% higher for the week at $1,913 per ounce, but showed a £10 and €10 loss from last Friday for UK and Eurozone investors at £1,460 and €1,611 respectively. Gold prices are caught precisely between the 20-day and 50-day averages at $1,901 and $1,924 respectively, says the latest note from brokerage StoneX's chief analyst Rona O'Connell, with little by way of fresh short-term influences.